Hey, it's Jason Coleman, mortgage broker with Price Mortgage, and today we have a lot of news to get to, and also I'm going to go through a couple neighborhoods and help you determine on how to dissect some information the way I personally would dissect information on Zillow if I wasn't a real estate agent and I'm trying to look at the market and analyze, is now a good time to buy a home or not? So a lot of reports coming out this week on builder numbers and all that jazz. So all these reports will affect stock markets and the way the Fed's decision are going to be made next month. I do believe that next month we will also see another 75 basis rate hike. It just needs to happen in order to get inflation under control. I believe that I think gas is going to level out here. I'm looking at some reports and showing when they shut down in 2020, all the oil refineries, it takes a long time to get these refineries. They can shut down really quick, but it takes a long time for the refineries to come back online. So I think that's part of the, gas price issue that we're having right now. I did see that oil fell $10 a barrel last week from 120 down to like 110. So that's pretty good news, but I do feel like food prices are going to surge 20 to 40% by fall, simply because diesel's having a hard time paying for gas and getting it to the market, and 70% of all the things we buy are brought to us by diesel. I think that we are already short 80,000 drivers, and I think the high gas prices and the DEF fluid, we're going to be seeing a big struggle in the transportation industry. So I recently came across a post that's been circulating in my local Phoenix, Arizona, my local Phoenix, Arizona market, and it says, "Marry the house, not the rate." Okay, so let's dissect marry the house and not the rate, because rates are ever changing and homeowners are always looking for a lower payment, and so they're always watching rates. And if you see a better rate where you can drop off your mortgage insurance and get the same rate, that usually is a big savings to most homeowners. But marrying the house, right? And they're saying marry the house. Housing is the best investment that you'll ever make in life. It just depends on how long you own the home. So if you own the home for 2 or 3 years, you're most likely, except with the exception of the past 2 years, you're going to see slow appreciation of 3 to 6% a year. But we had 40% appreciation, maybe 35% appreciation over the past 24 months here in the Phoenix area. So if you hang on to the house long enough, you're going to make, it's going to be worth something more than what you paid for it, just simply due to inflation. So if you take a 2% inflation over the period of 10 years, you're going to end up selling your home, if you ever sell it, for a higher price. So that's what they mean by marry the house. Now, however, if in a declining market, we are short on supply right now. We are still well short of what a balanced market is. I think we had if you go to Zillow, one of the cool things, there are a couple cool things about Zillow, and one of those things is you can type in homes for sale, all types, and just go through and do your filter all types, and it's going to come up with 11,276 this morning, which is, it's up there. Yeah, so we might be, by the end of the week, we might be at 12,000. I heard one agent say that we are gaining like 1,000 homes a week, 1,000 homes a week, and so that would put us probably in maybe August to November in a balanced market if it keeps going this way, which I think it will. I think the summer will be slow. It normally is slow, and people are going on vacations, and towards the fall is when parents have to make decisions on where their kids are going to go to school and if they're going to move or not. So I think things will pick up a little bit more in August or September than they will over the summer. I think we're going to see a lot more inventory coming this summer. That may be advantageous to potential buyers. But here's where I want to get at with marry the house comment. Marrying the house means you can never change the purchase price as well. So yeah, you're marrying the house for a long time, but you can never change the purchase price. So finding a great deal, which is what I would recommend, is try and find a great deal right now. Look for distressed sellers. Look for homes that are back on the market. So potentially if it's back on the market, that seller had a fallout, and potentially they could have found a new home that they're emotionally or financially in love with, they're tied to. So that might be an opportunity for you to actually make a better offer. By better offer, I mean that if you put in an offer and you don't get a counter, you're paying too much. That's the way I feel right now. So I'm going to go over 3 different areas. First, I'm going to go over a great neighborhood. Well, I feel it's great. That's my opinion. 85308 on the west side, which is basically the Arrowhead area. It's near a freeway, So we're going to look at a few listings here just to see, where they are. I'm just going to click on random homes. And this is what I do. If I'm looking to buy a home and get a great deal, maybe I want to flip it. Maybe I want to rehab it and flip it. Maybe I want it as a long-term rental. But when I'm looking at it as an investor from a long-term rental, it has to cash flow. I have to see either a history of what it's bringing in for rents, or I have to see that, the 7% interest rate, or, you can get some investor rates maybe in the below 5s if you get an adjustable. Adjustable rates are the new thing that everybody's going to be pushing just so you can afford it. But what happens, again, when the rate adjusts and let's say the market dips 20% and you're upside down, you can't get out of that arm. That's why arms are not always safe, right? Excuse me. So I'm just pick on random homes. We're going to pick about 10 and see where they're at. This one's going to be 7009 West Kimberly Way. It's listed at $725. It is a good-looking home. Boy, to me, this looks like an A property, right? It's got great floors. It's been updated. Wow, it is a good-looking home. Okay, so it's got nice tile in it. Built in 1987. Been on the market for 21 days. 250 saves. 4,800 views. Listed by Hogue Partners, so that's 72 sold. And it was sold in 2016 for $355,000. Now listed for $725. That looks like there looks like there's furniture in the pictures, which is interesting to me. Okay, so that means it's probably primary resident occupied. That maybe don't need to sell. There's a lot of equity. Maybe they're just trying to time the market. If you have that many saves and you are not under contract in 3 weeks, what do you think? I think that's probably overpriced. Here we have a $450,000 home. So in this area, they're priced, all over the place. This looks to be an empty home. It looks like it's in decent shape, but maybe hasn't been updated in a long while. It looks like it has nice cabinets. Empty, empty, empty. Okay, so why is it empty? It's been on the market 1 day. So somebody has moved. It's listed by Deluxe Realty. And it was purchased in 16 for $190,000. So they've owned it for a while. That seems like, I don't know. Let's see if it was ever rented out. It was never rented out here, at least not on the market. So that means it's probably a primary residence, and potentially they could be, I would wait it out for 2 or 3 weeks to see what kind of deal. But $450, 3-bedroom, 2-bath. Will we see that fall 10%? Can you get it for $400 down the road? Maybe. Who knows? There's not a lot of buyer demand right now. There's a lot of fear in the market. So if you're out actively shopping and you want to try and get a deal going. So here is a 72-hour home sale, it says. This is 4526. It's listed West Renee Drive and is a price cut of $10,000, a 72-hour home sale. It has been on the market for 28 days, so apparently, 72 hours isn't working out too well there. But we have 148 saves, 2382 views on Zillow. It was listed for sale. Let's see the complete price history. It says listed for sale, pending sale, sold for $300 December 2019. Listed for sale for $470, pending sale. Listed for sale. It fell out of escrow a week ago, and originally it started at $470. Now it's at $460. And again, it has been on the market for 28 days. So things are really slowing down here. Let's pick some other ones here. Let's do a 735. Wow, great looking backyard. It's got some, got a pool. It's got a nice patio. It's got an RV fence. 735. It's had a $5,000 price cut. It is a 4-bedroom, 3-bathroom, 2,600 square foot, built in 98. 32 days on the market. Only 45 saves. Only 45 saves. That's kind of low. This is Pete Castellucci, Best Homes Real Estate. Pete is the barbecue realtor guy. He sets up barbecues at all his open houses, which is pretty cool. So this has been on originally listed for sale for $765. It sold in February of 2020 for $440. And obviously there's a lot of equity here in the last 2 years. Boy, that's almost doubled in price. Not quite, but that's crazy. So it has only had in the past 32 days a $5,000 price cut or whatever. No. I think that's wrong. Originally, so it's been dropped quite a few times, maybe $30,000. But still, you know, you have to make the decision. Can you go in and offer? This is a great looking home. I'd say this is probably close to an A property. Now, how do you determine what an A property is? Well, it's been remodeled. It has, you know, new flooring and new bathrooms have been updated, and the countertops and cabinets have been updated, and it sits on a great piece of property. So either it has a great view, or it's next to a golf course, or it's next to a lake, or something like that. So every market, every community is its own market, and every street is its own market. So if your home is on the golf course and got a great view, but the guy on the corner is right on a real busy street and not on the golf course, those are not comparable. You know, that changes the value of home to home on the same street. So that's some good information. Now I'm just going to move to Munns Park here. A week ago, I said, hey, there's 27 listings for sale in Munns Park. Well, today there is 41 listings, so that's a huge increase in 1 week. Now, Munns Park is mostly a second home place. I would say the majority of owners there, this is their second home, vacation getaway. You do have, yeah, I'd say at least 25%, if I had to guess, maybe 50% permanent, you know, primary residences there. But there's some fantastic homes out there, and the view, and it's so quiet. So I'm just going to go through here and look at some of the new listings here. Here is an amazing home. This home is 17230 Winding Trail in Munns Park, built in 94. Looks like it was updated in 2013. It is an A-frame home, which is, you know, a home that looks like that, has big windows in the front, has an amazing deck on it. It is absolutely amazing. It's been on Zillow for 7 hours, already has 4 saves and 145 views. Now let's go look when they bought it. They bought it December 2nd, 2021, and they bought it for, it was listed for $695. They bought it for $720, and now it's listed for $795. So they haven't even owned it barely 6 months, right? Just barely over 6 months. Amazing home, but you know, I think they're just trying to cover the real estate costs. It says amazing Airbnb, yada, yada, yada. And it would be an amazing Airbnb, but I don't think it's going to cash flow if you purchase it for $795 if you're not buying in cash, right? So to me, that was an investor looking to do an Airbnb. I really wanted to buy it in Munns Park. That's why I'm kind of visiting this. You got another home right near it. It also has an amazing deck. It doesn't look quite as cool. Price cut 15,846 views. Been on for 12 days, 26 saves. That's not very many saves. Okay, so this is listed for sale for $799, and then next day it pretty much fell out, and then they dropped the price about a week and a half later, $784. Now it's down to $769. Originally it sold for $615 in June, 1 year ago, June 18th, 2021. And so prior to that, it was listed for $589. So they also overbid this home. So this is what you're seeing. that's why a lot of inventory, I think people are thinking, values. To me, the sentiment here is these second home owners that don't really need these homes. Maybe they're trying to tighten down their budget and trying to prepare for maybe some shift in the economy, and saying, well, maybe this is a kind of a luxury I don't really need. Maybe I think you're going to find that in the car market as well. I think you're going to find a lot of great deals, whereas how used cars were going up in price, I think they're going to come down in price, and we're going to see a lot more deals as the economy tightens, because we are at the lowest savings rate since 2008. So that's crazy. Now I'm going to go back to the Flagstaff. This will be the last one that we visit here. Flagstaff is where the Grand Canyon is, for those that don't know, out of Arizona or whatever. We personally purchased there an Airbnb, a townhome. We thought, hey, 50 million visitors a year. There's so many places to go and check out that this probably would be a great place. But what we didn't know is the market is very saturated with Airbnbs, and if you bought, say like in 2018 or 19, you were getting a good deal. You put down some money, you refinanced in 2020 or 21, and now you can cash flow on the rents. We purchased at 550. We struggled even with the lowest 30-year fix you probably ever heard of at 2.3, and we got really lucky with that. And we were just breaking even for 12 months. A couple months we made money, but a couple months we paid money. So in this neighborhood, I've been following it. There are 9 homes for sale. 1 home went under contract in the last 30 days, and another new one came to market. We have a single family home at 622. He's dropped his price $60,000. Another one at 660, been on there for over 60 days. And a couple new ones, couple that are probably smoking something at 850 listing. The view is great of the mountain, I have to admit, but I'm not paying 850 when I know that there's some other comparable homes that maybe they don't have the view, but I'm not paying $200,000 more for a view. Give me a break, maybe $15,000. So that's where every street is its own little economy, and vice versa. And neighborhood and whatever. So we have 700, 649, 619. That 619 is an older comp, but either way, these homes have been sitting for over 30 days, not moving very well, and most of these owners bought in at around 400 or 445 just 2 years ago, and they're hoping to, I don't know. You make your own educated decision. So if I was going to come in on one like something at 660. I'm going to come in and I'm going to offer probably 10% less. I'm going to offer in the 500s. Now, when they say that you'll see by the end of the year an appreciation, yeah, that's probably right. So if we bought at 700,000 and they're selling at 660, well, last year it was 550. So at the end of the year, if it's at 600, yeah, you're still going to see, pretty close to a 8 or 10% appreciation if it mildly, because real estate takes a long time to come down in price if it's going to come down in price. Which I feel it's going to come down in price because the inventory is going to lift and you have more competition, and we're going to see who really needs to sell. So make great offers. That's just what I think. If you're going to go out there and buy, find an agent that will take the time to lowball the home prices and see who really needs to sell. That is my best advice. It's my personal opinion, and if we want to sell homes, I think that's where sellers need to be realistic. So if you are considering buying a home, please reach out to me anytime. Let's see where you are. I say the best thing you can do to prepare right now is pay off all your debts as your credit card interest rates are going higher, your HELOC debts are going higher, anything that's adjustable, tied to adjustable rates are going higher right now. So I say give me a call. Let's get a plan together for you. Let's watch the market and see where this goes by August. I personally am still standing by at least wait a few months to see where the inventory takes us, to see who really needs to sell or who can go back to renting their home or whatever. So hey, I appreciate your time for watching today, and until next time,